Welcome to the Capital Spreads weekly update. Today is Monday the 25th of February 2013. And it's been quite a good start to the week in terms of equity markets, not such a good start to the week in terms of sterling, but the FTSE is a little bit higher. It's at 63.65, the Dow just above 14,000 at 14,015, Euro at 132.35. Cable is the one that's really suffered, of course, following the downgrade on Friday night by Moody's of the UK's credit rating from AAA. Cable is at 151.45, having been lower, quite a bit lower over the weekend in the Asian session. It's just recovered from its lows. Gold is at 15.90 and Brent is on the figure at 115. So really it's all talk about the UK and its credit rating downgrade that we've had so far just before the weekend, and that has led to this little rally in risk assets. Of course, as mentioned, sterling is suffering quite a bit. There's a lot of talk about what that will mean for the UK going forward, and of course, importantly, next month, not that long away, is the Chancellor's budget, so how he will address his fiscal plans in reducing the deficit and bringing down debt, whilst at the same time clearly being told by global credit rating agencies that at the moment his plan doesn't seem to be working. So for that takes us into Tuesday. Lots of data this week. It's going to be a busy week on the economic data front, but tomorrow we get US home prices from S&P Case-Shiller. We also get new home sales as well as consumer confidence from the US, and at the same time, as if that wasn't enough, we get Ben Bernanke making a testimony to the Senate Banking Commission. So lots to focus on in terms of US tomorrow. Then on Wednesday we get consumer confidence data from both Germany and France. We also get the second reading of the UK GDP number. Now that, of course, the first reading confirmed that Q4 2012 contracted. So we expect the number to come in still at minus 0.3%. There might, however, be a little bit of upward pressure, so possibly revised upwards if anything, and that's purely because construction has rebounded a little bit from its lows, but it's unlikely to see anything significant. Then from the US we get durable goods orders and pending home sales. That takes us into Thursday. So Thursday, continuing the theme of lots of consumer confidence data, we get the UK consumer confidence figure. That's expected to decline because, of course, in the UK we are suffering from high inflation, and that inflation looks set to remain high, and if we get a continuation of this weak sterling, that may benefit our exporters, but of course it means we're going to import more higher prices. That will fuel inflation further, which is likely to dent consumer confidence. We also get unemployment data from Germany, and from the US we get the second reading of GDP there. Now that's expected to bounce back into positive territory. And then also there's the Chicago PMI from the US. That takes us into Friday. Of course, it's the first Friday of the new month, but there's no non-farm payrolls. They actually come next week. But there's still lots of data. There's the UK and EU manufacturing PMIs. There's mortgage approvals from the UK. There's also unemployment from the European Union. And then from the US, as mentioned, no non-farm payroll, but we do get income and spending data as well as an ISM manufacturing number. So this week really is very busy. Of course, we've got the Italian elections as well, which are due to see the first results of those sometime this afternoon. So there is plenty to consider going forward, and certainly this week has got off to a bang with, as mentioned, that downgrade to our AAA credit rating. That's it as ever. Do give us feedback. media@capitalspreads.com.